Welcome to TradeTheNBI.com. This is John. This report is for the 29th, and as we get close to the end of the month, what a shock. They captured all those shorts going through there and then reversed on them and driving things up. We can see that with that reset of the DOC steel was enough to just push them. And we're getting that turnaround where the small short spike from the DOC spread right here faded pretty darn quick. It's just because the orange move was pretty extreme, though we are seeing a little bit of a pop-up, which means on the orange, at least from the DOC, means we're probably not going to see too dramatic a move straight off from this. So that's sort of a thing. But here you can see from the shakeout that slow super build from the histogram dips back down and then it creates the next wave. Now the key here will be that next lower one is the important one, because if we make higher high on lower histogram, then we've got a problem. Secondarily, if we make a lower high and haven't reached that high, even more significant from a failure standpoint. And we can see the NQ performing stronger because it didn't dip as much as the S&P. That's been the case for, well, quite a few months now, as the NASDAQ has been the leader. And things are just chugging along, but these are still pretty strong readings from an NBI standpoint, that the crossover. From a treasury standpoint, of course, confused people all jumping back into treasuries because they don't know which way things are going. Was going to be short, long, then yeah, they just can't tell, and so they're just throwing money away because they can't see what's coming. From an oil standpoint, just holding down here, and again, this is one of those where you just want to keep it within this mid 70 range, ideally moving down to the lower 60, but seeing a little bit of a positive build right here from the NBI reading, as well as potential move of the orange below. As long as orange is caught between the cyan and red, you're in a continuation mode, which from here is just sideways action. So worth noting, because if it stays there, then it just keeps things in a modified tone. I think that literally is ideal situation from a Fed view. Euro is still ridiculously high for what it is. There's just no real justification other than they have to prop it up, because otherwise the Eurozone falls apart and quickly, and can't do that in the middle of a war, which that could be an interesting one, because that's starting to heat up now. You've moved your Wagner forces into Belarus. Poland is massing some forces in Kyiv right now, talking about potentially having some of their forces move to the western side of Ukraine. That would put them in direct connection to Wagner forces in Belarus. So that, and of course you threw in the extra nuclear weapons moving into Belarus. Those are the kind of things that can really cause dramatic market moves. So nothing yet, but we'll keep it in the back of our minds. And Bitcoin pushing up towards its thing, and just sort of short activity from there. It's just been a reset for short-term buyers as it percolated and allowed to collect all that move. There's still positive extremes from it. So when we do get a significant sell, that's definitely something that's going to happen back to that 26 range. There's just still a lot of built-up excitement, but you're not seeing it from an ETH, and that's just relative to the players and what they're doing. So you can say that that's more a buy the rumor, and then they will sell the news when it's finally decided. From an ES standpoint, pretty clean. We had the nice run up, sort of flattened in between here. We had the spike, brought us back down to the 50%, but wasn't enough to really sustain anything. We're creating a new spike here as we reach the 100%, but as long as magenta is over the yellow NBI, you have to wait until that flips around. But we can see from a shakeout standpoint, already starting to make progressively lower highs as we meet there. So you're going to suck in a whole new range of long buyers and then slam the door on them. That's how it works. Beautiful stuff. And then from an intraday, you can see in the pre-market, we were already elevated, sold off to clear out stops, and just ran it right back up. But from the intraday action, there's still, again, these really smooth ranges that just allow for clearing of weak hands, intraday stops, and that, and still plenty of range within those moves. So I think that from that standpoint, it's all good stuff from an intraday standpoint. The daily is just a little bit more complicated, but still not that difficult to manage, simply since we know kind of what the trap setup was, and it played out perfectly. So, as always, though, I will update you. New indicators and that will be coming out for July, and that should be an interesting one starting the beginning of the month. Then you got the 4th of July holiday, and that's going to really it always creates drama around the 4th, so it should be fun. But you have all that new fund money coming in around that time as well. So we'll follow it and go with what the readings give us. Trade well. We'll talk to you later.